Okay, good afternoon. It's the final Wall Street crossover show of the year, sponsored by Admiral Markets, as it says on the screen here, and co-hosted by Darren Sinden, who's their market commentator.
Good afternoon, Zach.
How are you today?
Feeling slightly tired as we rush towards the end of the week, but not too bad apart from that.
Okay, right. So let's move into the crossover show. What have you got as the first bit of data?
Well, there wasn't much in the way of European data today, Zach, so I've just really gone with a couple of, sort of headlines that caught my eye. First of all, the FTSE's on course for its best week since April 2015. But it's been put in the shade, really, by many of the other European equity indices, and some of which are up nearly 10% over the last 7 days, led by the DAX. Of course, whether that will continue, this sort of post-Greek deal euphoria, whether that's going to continue, we'll have to wait and see. But for now, it's bulls are leading the way. A small pullback today, but ahead of the weekend. But we could probably see extra gains next week. Mark Carney spoke again last night, Governor of the Bank of England, reiterated really what he said before the Parliamentary Committee early in the week, that interest rates may rise sooner than many people think. He doesn't give a specific timescale, and most people that I've read who have commentated on this have said that January is still probably the earliest that we'll see a rate rise. Nonetheless, I think he's priming the markets for early action. And then news that Greek banks may reopen on Monday for what are being described as limited services. I'm not quite sure what that means, but
sounds like the UK banks, really. Up to the same level. That's good.
Yeah, well, so we'll see what happens there. But perhaps that mark the start of a return to normality in Greek life. But how long that will last remains to be seen, of course.
Okay, all right. Next slide.
Okay, a couple of European movers. In fact, both are Swedish names. Sweden's quite an interesting proxy for how the issues of the Eurozone are transmitted into the wider European market. Obviously, the currency's been struggling. The bank has moved into negative interest rates to try and defend the economy. And, of course, the Swedish economy is very much export-led. So, first of all, Ericsson, one of the world's largest telecom network manufacturers, I've gone with the B shares here, which are the most widely traded. That's ticker ERIC-B in Stockholm. 94 and a quarter krona, up 4.37%. The market's seen positives in the Ericsson numbers today. Profits dropped by 20%. However, revenues, some margins in the network division, which is the principal part of its business, jumped sharply. The margins went from 2 to 8%. So whilst it's making less money, at least in terms of overall profits, the actual margins are growing nicely. So if you can keep a handle on cost, that should
feed through positively over the
going forward. Yeah, and then staying in Sweden, Sandvik, which is ticker SAND, S-A-N-D in Stockholm, 90 krona here, down 4.2%. Higher profits from Sandvik today, but it said that demand in many of its end markets is still declining. Well, it's not that surprising really when you consider that it's a mining equipment manufacturer, and obviously the mineral resource industry is still in turmoil. So the market's taken a slightly dim view of that, and as I say, they're down 4.2%.
Okay, and on to the M&A.
Okay. European M&A today, 888 looks to have won the battle for bwin Party Digital, buying them for £898 million, beating off offers from large Canadian rivals GVC. It's not the only deal that's being done in the sector, and I think it's likely that the consolidation is going to continue. 888 itself has been a big target in the last 6 months. William Hill launched an offer around the turn of the year. But
I believe the bwin, the deal, it was a very low price, wasn't it? It was £1.10 or something? Or?
Yeah, it's not necessarily a brilliant price, and it's probably being done out of necessity.
More like a sort of merger or consolidation.
Yeah, absolutely, because
situation.
as I point out here, scale is seen as very important now in a business that's being squeezed very tightly by tax and regulatory regimes. Having said that, other stocks that in the sector that are already involved in deals, Playtech, obviously recently bid for plus 500, and Ladbrokes is in talks about a merger with Gala. So there's other M&A going on, and even those two deals won't be the last I don't think we'll see in the sector.
Okay, well, up to the US.
Okay, a little bit more on the on the table today in terms of economic data. First of all, we've got CPI for June. Look at the month-on-month number. The forecast is for a modest read of plus 0.3%, slightly lower than last month's prior figure of 0.4%. And then housing starts and permits for June 2015 is the next number. In terms of actual starts, we're looking for a forecast of 1.18 million, I should say, against a prior read of 1.036 million. And then in terms of new permits, the forecast is for 1.178 million against a prior 1.275 million, so slightly easier in both camps there. And then good old University of Michigan consumer sentiment for July. It's very much a Marmite forecast. This one, you either love it or hate it, but the expectation is for a reading of 96 versus a prior read of 96.1. Just to give it some context, the consumer sentiment number has been heading higher basically since March 2014, so it would be a bit of a disappointment if we did see a downward number today, but that's what
right, they're not phased by the prospect of rising interest rates yet.
No, that's what it's telling us, yeah.
Okay, and on the movers and levels?
Okay, a couple of household names in the pre-market movers this morning. First of all, Hertz, one of the world's best-known car rental businesses, $29.01 pre-market, up 11.96%. Basically, they've been through the wars recently, having to represent most of their financial statements for the last 2 or 3 years, but they've finally got through that now. They can confirm, or have confirmed, that they will be spinning off their equipment rental business, and that's on track, and they reaffirmed their $1 billion share buyback. So all of those things in
happy news.
Yes, and they're up a short 12% their pre-market. And then Google, ticker GOOG in the US, $642.73, up a whopping 10.8%. After the close last night. Earnings beat by 28 cents. Revenues were light, but in the conference call with the CEO, dividends and share buybacks were not discounted, and she's conducting a wholesale review of the business and where they spend their money. So the market liked what it heard, and as I say, they're up over 10%. In terms of levels to watch today, not much action really as far as European equities are concerned. As I said, a bit of a pullback for the FTSE and for the DAX. So we're looking at 6750 on the downside in the FTSE, and 6800 to the upside in the FTSE. I think 67.99 was the high so far today. So
you called it quite well.
It's not difficult to pick a round number, is it? And in the DAX, 11,665 is the downside level to watch. Plays 11,770. S&P, we're going with 2110 on the downside, plays 2125 to the upside, and for the Dow, 18,110 on the downside, plays 18,145 on the upside. Quite a tight range there for a change in the Dow. Euro dollar, that 108.60 level from March is still hanging in there on the downside. 108.97 is the level that we'd need to see broken to move higher. Aussie dollar, US dollar, 73.50 stays there on the downside, plays 74.11 to the upside. In dollar yen, we're still there at 123.75, plays 124.20 to the upside, and in cable, 156.06 to the downside, plays 156.70 for the upside.
Right. Well, that's all rather sort of not so volatile anymore.
No.
Quite tight end of week type of ranges. Okay, well, we'll see how if next week is much more volatile. Darren Sinden, market commentator at Admiral Markets. Thanks for coming in today, and we'll resume hostilities or friendly talk on Monday. That's it for now.